Welcome to the 10th episode of Junto Club. On this episode, Matt shares all a novice investor has to offer when it comes to the Gamestop news story and stock options. He seems to think he'll make you rich. Shu talks about a book with a great title, awful subtitle, and half-decent advice. For any questions, comments, or to tell us what made you millions, email juntoclubpodcast@gmail.com. This is Junto Club.
Junto Club.
All right, so welcome to the 10th meeting of the Junto Club, where we are inspired by, the original Junto Club started by Benjamin Franklin around about 300 years ago. And the goal is to, of course, to have fun and learn from each other, by discussing interesting topics such as science, technology, politics, philosophy, and business ideas, and of course, investing as well. So speaking of investing, I think this is the topic of the main topic on the agenda for today, right? And then I think we're going to talk about, of course, what happened of Gamestop, the craziness, and then we're going to go to Matt's perfect strategy for investing without risk. And then I'm going to talk about one of the books I've been reading right now. Actually, I just finished it. I think this is my second favorite book, actually. It's called All I Want to Know is Where I'm Going to Die, So I'd Never Go There. So it's a great book. I'm going to talk about it later. But before that, I think everything on our mind right now is probably daylight savings, right?
No, not at all.
That was an abrupt turn.
Exactly. That's my style. So actually, I just found out a really interesting story about daylight saving. Do you know who kind of started it in the U.S. in a way?
I'm going to take a guess and say Benjamin Franklin.
Exactly.
Oh, nailed it.
So actually, I heard it on Wait, Don't Tell Me this week, especially Benjamin Franklin back in the day, I think he intended as a joke kind of in a way. He wrote a letter to some of the people in government, say, hey, we should start, should let everybody get up, when the sun rises and go to sleep when the sun sets, right? So that way you can save all the money on candles. So that was his idea, to save money, right? Save candles.
And his joke still haunts us today.
Exactly.
Oh my gosh.
Yeah.
Well, I don't know. I do enjoy it being later at night in the spring, but it is brutal losing that hour.
Yeah, I don't know. I mean, it made sense back in the day,
Of
more
course,
so,
yeah.
but now people aren't waking up at the crack of dawn consistently anyway, so.
Well, yeah, a lot of people actually complaining about it. I actually, personally, for me, it's a good idea because I like to wake up early, and I usually like to wake up when I go outside. I want it still to be dark, right? Because if you don't do the daylight saving, I think in the spring or summer when I wake up early and it's bright already, I don't really like that, right? So I want to wake up when it's still dark. So.
I think what most people don't like is in the winter it makes it so you get dark earlier.
Right.
And I think most people would rather have that extra daylight in the afternoon.
Yeah.
So maybe they can get out of school or work or something and not already be like pitch black, but.
Yeah.
And I feel like that's a very Shu thing, wanting to wake up when it's dark. I feel like 99.9% of the population would be like, that's like the sign that they shouldn't be awake.
Yeah, I guess I want to get out early, get the workout in, so that way when I finish workout, is the time sunrise is perfect, right? So.
Right. No, I mean, I occasionally did a workout class with my trainer and would be leaving sort of about sunrise at the gym, and
yeah,
I always felt like my workouts were terrible though.
I've heard of, they've done proposals to make daylight savings permanent. So it's like it's in the daylight saving shift is the time. but then there's just no shifting ever. I think either way, no shifting, most people agree that no shifting is better because it's actually causes. Sorry,
like
what?
You don't change the time? Is that what you're saying?
Just never, like, just pick one. Because, I mean, every time it shifts, there's issues. So there's, like, spikes in accidents and other issues every time. So, like, most people recognize it's bad. It's just kind of got that. It's not that important, though, right? So it's kind of got inertia to, like, actually get changed.
Yeah. Anyway, let's move on to a more crazy topic of this week, I guess. Matt, you want to go ahead and explain what happened this week?
All right. I mean, I feel like everyone's explained it already plenty of times. Do y'all understand it?
No, I think you can just give me a general context. I think I read a little bit about it, about what happened to Gamestop, but I think you can probably explain the story better.
All right. To try to summarize it in not too long, some hedge funds shorted GameStop. Basically, if you don't know what a short is, you can just think of it like as a bet that the store's value, the stock value will go down. And they do this by like selling a stock and then at a certain price and then buying it back later for cheaper. So if it goes down, they make money. And several months ago, this one random guy on Reddit, he kind of noticed two things. One, he thought GameStop was already undervalued in terms of, the stock value. Because everyone's kind of like, oh, GameStop's on its way out, digital media is the future and whatnot. And that's not wrong. But he's like, there's still a decent amount of physical sales. There's new consoles coming out, blah, blah, blah. So basically, he thought the stock was undervalued. More importantly, market information revealed that 140% of GameStop's stock had been shorted. So that is, more than 100%, which means at some point these short sellers have to cover their position. So either buy the stock back to give it, or just buy out of their position. So you can think of that as like a large amount of guaranteed demand. And the thing about these sort of short selling is they kind of have to just buy what the market price is, generally speaking. So basically he was like, GameStop's a good investment. And, and then it started to pick up a little. And then it kind of became a thing on the internet, specifically Reddit, Wall Street's Bets. It became like this big thing where they're like, oh, like everyone, like GameStop's going to make you a lot of money. And what they explicitly were trying to do is what's called a short squeeze, where you, it's kind of what we're already talking about, where a short squeeze is where you basically buy and hold as many of the stocks that people shorted as possible. And then when they are forced to try to cover their position, they have to buy them at super high rates because, you have them all, or, the people who have them aren't selling. So it drives the spice. And this was really modeled off of 2008. Volkswagen was briefly the most valuable company in the world for just like an instant in time, because there was a short squeeze where its stock price went over like 600 or 800 or something, which at the time in 2008 was much more impressive than right now with like, Tesla at like 1,000 or whatever. But
what caused it to go up became so valuable?
It was a short squeeze. So a lot of people had shorted Volkswagen, and then other people bought and held, and the price spiked like crazy. So basically, this was Wall Street Bets, like essentially the plan. They're like, some hedge funds shorted this. We can do a short squeeze and make a bunch of money off of them. And
but back in 2008, it was done by like sophisticated investors.
Probably, yeah. I mean, I'm not that familiar with it, but like there wasn't like, things like Robinhood in 2008.
Yeah.
But now just idiots on their phones and Reddit can, do stuff like this. So, and then of course, other big hedge funds did get in terms of buying GameStop stock to hold, taking the sort of long position, the opposite of the short position. So it became a whole big thing. Then people started looking at what are other stocks that have high percentages of shorts, right? So like AMC was one of them. Apparently it wasn't as bad, but like a lot of people had shorted AMC because they're like, movie theaters are dying anyway, COVID plus, boom, boom, boom. The AMC stock, shoots up, and then people start trying to find the next one, right?
Yeah, win for me.
Did you sell your AMC?
No, I usually don't sell. Yeah, it's just too much hassle decision anyway. My strategy is just buy and hold, and over time, because last year you told me to, we were just talking about AMC, and I just over time, just like, when it was down, I just buy a share or something, right? It's only $3. So, over time, it's only like 10 shares, only $30. Well, if I lose everything, it's only $30 anyway, so no big deal.
Mm-hmm. Well, that's true. I'm not sure. I feel like you might have missed the most. Like, if you just hold, you'll probably miss the most about. Like, I doubt AMC long term is going to be as high as it is in some of these spikes. But
right, my brother sold his AMC.
That was probably the smart move. But it does seem like these things aren't going to immediately crash super low, right? Like, they're hanging around, and I'm guessing the stock will be inflated for at least somewhat for a while.
Yeah, but AMC, it doesn't go up as much as GameStop, right? GameStop was like a year ago, like $4, $5, and it went up like $500, right?
It's been floating in the 300s for most of this week, the last few days. Also violently shooting up and down, but sitting consistently in the low 300s overall if you kind of average over time. Which is like 1,000 plus, not 1,000, I don't know, 1,000% or whatever. More than 1,000%.
So what did you guys talk about in the situation?
I thought it was funny. Oh, and then hold on. But we forgot the biggest part. So,
that's right.
So Wall Street Bets Reddit group of Redditors is trying to do the short squeeze. And then yesterday, a bunch of brokers started restricting buying but not selling of these stocks, which very much, we'll see if there was something they actually needed to do in terms of to keep everything working, keep themselves solvent and whatever, or if they're just trying to protect businesses who have invested with them. But it sure looked like they were trying to protect hedge funds that were overshorted in the stock. Because if you restrict, buying but not selling, obviously that's going to be downward pressure on the price. Because a large portion of retail investors, so regular people, retail investors, couldn't buy the stock, but they could sell what they had. And then institutional investors like hedge funds could still buy. So they did this, the price crashed. And then a lot of that was bought up, and a lot of people were wondering how many, how much short positions were they able to cover for half the price or less because of, what they did. And there's still been restrictions today. So a lot of,
we need to say it's Robinhood, right?
a lot of, yeah. And
it was supposed to stand for the little guys, right? But it's not really.
Yeah, and they say they're trying to protect investors, right? And you could argue, are some people going to get in on the end of this bubble?
Right.
But the question is this a bubble or a short squeeze, right? Because a pump and dump, a bubble, you make money off of the people who buy in after you, right? And if you're the last group to buy in, you're the one hosed. But in a short squeeze, they're trying to make money off of the hedge funds who are sitting on short positions. And all this week, so, we don't really know who has exactly what positions, but there are still a lot of shorts on GME. GME's GameStop. And which kind of makes sense because everyone knows GameStop's not going to trade at 300 forever, right? So it is going to eventually drop down. So you got this crazy war of people trying to hold the stock versus people trying to guess and short it for the right time to make bank. But anyway, so GameStop, Robinhood, they came out, half of everyone who has Robinhood, which is millions of users, has GameStop stock. Okay. Half their fucking users. And then they blame the buying of it on their app, which pushes the price down. And this just pisses everyone the fuck off. And like I said, it looks so Citadel owns part of Robinhood and works with them directly. Yeah. Mm-hmm. And Citadel also invested in some of the firms that had shorted GameStop and were getting boned. So it sure looked like Robinhood might have been just doing it at the behest of, the companies they work with, to save them essentially.
Yeah.
But, they say that's not true. It would take a real investigation to figure out what it is, but it's a bad look. It's a bad look. And this is when politicians got involved and you had Ted Cruz and AOC and Ben Shapiro all agreeing that this is, corruption, Wall Street getting mad when the little guy wins.
Yeah.
All right. That's the summary.
That's awesome. Yeah, yeah. I think it's a good summary. And yeah, what I think AOC tweeted and then Ted Cruz and I say, well, I agree or something like that, right?
And then AOC was like, "Fuck off! You tried to have me killed a few weeks ago." But
Right.
Really? What do you mean? Oh
Shit.
yeah, the Capitol riot.
yeah,
Yeah.
she responded to that Ted Cruz thing. It's like she's like, "I'll work with basically any other Republican, but you tried to have me murdered, so fuck off."
Yeah, true. Yeah.
But yeah. So and then just to get on the fun, after it was already really high, I bought some GameStop stock. Saw it go more than 100 above and below of what I originally bought it. Eventually, I cashed out earlier today for like a small gain, not much, but I was like, I'd really only bought it to kind of just like be a part of it, right? Like wasn't trying to make money, but I'm like, this has just become more stressful than fun. So I'm like, I'd take a little bit of cash that I gained and just exit out here.
When did you buy it?
Like a few days ago.
Oh, were you able to buy shares or fractional shares?
I bought one share. I mean, I could have bought a fractional share because, Robinhood, they did their stuff yesterday morning, and I already had a stock at that time.
Yeah, I tried to buy a little bit today. I said, "Oh, you cannot buy fractional shares. I don't have like $300 to spare." Yeah.
I tend to avoid buying fractional shares anyway, but
Oh, really? Why?
we'll get into that later. Partly just because I like round numbers, but partly because my genius investing strategy doesn't work if you have fractional shares.
Oh, okay. All right.
But yeah. So, AMC's rich, GMC's maybe a bubble. So we really don't know. I don't know. It's kind of a bubble, kind of a short squeeze because there's just shorts and there's still a lot of shorts on the stock. And I guess I thought it was going to blow up today, like something crazy would happen, but I guess not. So we'll see next week what happens.
So since you are a resident Reddit expert, so have you been following a Reddit thread on there?
Yes.
And what did you think about it? What do you think about the people in the comments on there?
I guess different things. The Wall Street's Bets is, we'll say, an interesting online community.
Yeah.
I encourage people to go look at it yourself. Lately, what I've noticed is they've really been getting into the whole populist vibe of like beating Wall Street. So there's a lot of people who are just like, I'm never selling GameStop, rather than I'm going to try to sell when the short squeeze, like the main squeeze happens to like profit off of. And I'm like, are y'all really? I'm like, this is like, initially it looked more like people focused on like, here's how we can make a lot of money. And now it seems like more and more people are like, yeah, let's fuck Wall Street. And I'm like, I think you're just going to fuck yourselves, right? If you're actually intent on just holding forever, you're just going to lose most of your money.
I mean, eventually greed will take over, I assume.
Yeah, for some of them. But, the squeeze, the vent, like if there is like a distinct squeeze, right? A spike and a drop, it'll probably be, I don't know. I would think it would be over fast. Maybe not. It's crazy because, like I said, there's so many people betting on it both ways, essentially, and trying to like time this.
How long have you been following the thread?
I mean, I guess since earlier this week.
Oh, really? Okay.
Or like at the beginning of this week. So, I mean, obviously this has been like a thing building subtly for longer than that. Like the guy who started this made an original video like 6 months ago being like explaining why he thought GameStop was actually a good stock. And, and he, at the time, he's like, people are probably going to like laugh and turn this video off. But, that's what he thought. But it's only gotten really big recently.
So why do you think GameStop is a good stock? Because my question is, actually one of my questions for you guys right now is GameStop a good business, right? So why do you think that GameStop is actually a good stock?
I think the biggest thing is he doesn't necessarily think GameStop's like a tremendous business with a huge future, but he thought it was already undervalued was the main thing. So he put out some stuff where he said they got some new management teams. They're pushing into online retail a lot, and they still have like they have like a non-trivial amount of like quarterly revenue through their stores and stuff. So he was like, yeah, like obviously gaming is going to be strictly online at some point. Maybe 20, but like that might be 10 to 20 years down the road, right? So
how much was the price then?
Like a few dollars, I think. I think it's gone from like $3 to 300. Consistently with spikes up in the high 400s occasionally for short times.
When he saying that it's undervalued, it's because the share was like $5. He says it was undervalued, right?
Yeah, and like if it was just undervalued though, like that's only half the equation, right? It's like it's undervalued plus more than 100% of the stocks being shorted. Like those things combined make the potential for the price to surge very high.
Yeah. I think some article I read was like this short, the people that are shorting the GameStop and $5 is kind of almost like, why would you short a stock when it's only $5, right? Because you only can go to zero, right? Which you only get like $5, make $5 per share. But if it goes up, it's infinite because potential, because there's no ceiling for how much can go, right? So how much you lose all the money. So it's like, why would you short a stock always like only $5?
Yes,
Wow.
these type of shorts have a limited amount of possible profit and an unlimited theoretical potential loss.
Yeah.
Well, I mean, I think you're looking at GameStop and AMC though. When I think of them, those they'll be AMC has the potential to be sort of like the one big movie theater chain that survives this pandemic, right? So, but I mean, realistically, it seems as though there were times during the pandemic where it certainly seemed as though movie theaters weren't going to make it at all. And a brick and mortar place that sells video games, I could easily see that going bankrupt pretty readily. Yeah. So, I guess me thinking about is zero, you're absolutely right. There's infinite loss possible, whereas there's finite gain. But it certainly seemed like the gain was almost assured if people hadn't taken notice of this. But
yeah, and to be fair to them, this is something people do all the time successfully and make money, right? This is not the first time, a hedge fund is shorted a business. It's just kind of, but it is the first time mass amounts of retail investors, collectively through internet forums, aka Reddit, agreed to screw with them over it. So I can understand a little bit. This is a unforeseeable situation, I think.
Mm-hmm.
Right.
So I want to go back to the GameStop a little bit in the business side, because I don't really play games, computer games or console games right now. So I think, Matt, you are the only one that actually really into games now. What's the GameStop's business model? I think they only sell consoles, right, and a video game in the DVD form, right? Mm-hmm. What else do they do? I know they sell merchandise and stuff.
I think that's mostly it. The consoles and games themselves, they have the exchange, which is less of. They used to be big on trying to buy and sell used games between people, but I think that's less and less of a thing these days. And and they're a little merchandise. So, I think that's it. Like I said, they have some sort of online retail aspect, which I assume is similar, trying to just sell and distribute games. Kind of acting like Steam or things like that. But
online, people can just buy it and then download the game through the.
I haven't really looked, I'll be honest, but like I said, they're making some money, and I think it's mostly through the console market. So I am also more of a PC gamer, and I don't think there's that much for PC at GameStop. But
oh, really?
Console people, which is a lot, to be fair.
Okay, so it's almost like Best Buy it's more like Best Buy for games, right? People just go there to buy games, and so. I guess, that's why it doesn't look like there's any future, right? In 5 years or 10 years, probably not going to be existing anymore, right?
Without some major shifts successfully to focus on other aspects, probably not. Consoles will be around, but eventually consoles will stop worrying about giving out physical copies of games, right? That's on a time limit.
Yeah.
Right.
So
that's becoming increasingly rare already, I think. So
You mean DVD game?
Right. There'll always be people who want to have collections of games, of physical games from their, there are people who want to have records and stuff like that. Yeah. But I think new games, it will become increasingly more rare, and they may put out specialized ones that would be sold in a comic book store or something like that.
and then even if they do, like maybe if people do really focus on GameStop to buy their consoles, like, you know, the console launches are every 5 years, that most frequent, right? Like that's not.
I see.
That's not a long-term sustainable. So they do, like, the company will fail unless it manages to like shift in some meaningful way. But the timer isn't, you know, this year, right? Like they're not going to fail this year. So, and the people who shorted the stock can't wait that long. They're losing money.
Yeah. So the guy who say is a good undervalued, did he say any other reasons? Just the price is low and then new management's coming and people are shorting it and that's it?
I mean, he has like an hour-long video that I didn't watch most of. I will, if you want, I'll send you the link.
That's good. I think, so I think that's good enough for now. I think, my thoughts on this is that I actually really like what's happening, right? That's why I want to buy a little GameStop to support the movement in a way. Because for me, because I look at the subreddit actually, and there's like 5 million followers, right? And then one thing I really don't like about actually the education in the U.S. I think I mentioned before is that we don't teach like financial literacy. Like in high school, you know, even in college, right? So I personally, I don't really start thinking about money management stuff until I'm in like my 30s, right? So that's like too late for me, right? So I guess I'm really glad there's a lot of like actually at least 5 million people are actually like at least starting to be aware of like what's going on in the financial market and then getting into the market, try to, you know, learn. I mean, even you gamble a little bit, but you know, I think most people know they won't like try to, you know, gamble with all their assets, right? They probably just playing with their disposable income. So I think that's a good sign, and it's and yeah.
You say that, but there are people who have committed suicide for, you know, losing everything on Robinhood. So
yeah, but there's one or two person, right? So I mean. Most people, I mean, out of these 5 million, you know, they probably, most of them just using their 99% of these people probably only play with their disposable income. Hopefully.
I don't know if I'd put the percentage that high. If you go around on it long enough, you'll see plenty of people being like, I'm all in on GameStop or, you know.
Right. Okay. 80%.
And I guess it's also how you define disposable income. Like, I mean,
money.
That's what I mean. If it's money they could throw away and be fine, like like sort of if they were to go to a casino and be fine, then you know, I think there are people definitely going above that. But you know, I mean, are they losing their houses on there? I mean, maybe that's less rare.
Yeah.
So no.
All right. So I think that's pretty good for me on this topic. And I think another thing is about, I think I didn't hear mention is because like in 2008, what happened in 2008 was like Wall Street, right? They were really like take a lot of risk, and then, you know, they caused the economy to crash, and then these Wall Street guys, the hedge funds, they didn't really suffer any kind of significant consequence, right? They got bailed out, right? So this is almost like, I think a lot of people try to get back, and then in a way, almost like, right?
Mm-hmm.
Yeah.
Go ahead. I do feel like a little bit of that populist sentiment, although it feels very good, right? And it's probably not entirely accurate because there's definitely some, like I mentioned earlier, there's definitely some big hedge funds that like joined in, like playing the long game on GME, like making money off of what that's happening. And, you know, and yes, so there were some mid-sized hedge funds that were shorting it, but like it's not like you're killing Wall Street overall, right? Like, and I'm down for like random retail investors to make, you know, some good money off of it, but you know, you're not hurting Wall Street. You're hurting like one investment firm while helping another. It's kind of a trade-off.
Do you think, so you don't think this is going to last? It's going to crash next week or something?
I would be surprised if the price was still, you know, above $100 at the end of next week. But yeah, I don't know. We'll see, I guess. We'll see how long. It's basically a staring contest, right? Right now, between people holding GME stock and people holding, you know, short positions on it.
Mm-hmm.
Yeah. I'm more interested if this will just like lead to shorting being like a far, far less common practice.
Definitely shorting this much of a company for sure.
Yeah.
And I've seen people talk about like from now on, like financial people will have to like put in the risk factor that like a stock gets memed on the internet and then just like blows up, right? They'll be like, this is something that can happen. So you just got to be careful.
Well, this is the Elon Musk effect. Like anytime Elon Musk tweets about anything, it takes off, and you just need to predict what Reddit is going to pick up next.
I need a trading algorithm that just looks for company names in his tweets and then instantly buys.
Well, the reason he did it because he has beef with
short sellers.
Short sellers, right? Because short sellers have been. I mean, a lot of people were shorting Tesla when they were like 200, 300, right? So then, actually, there's some short seller actually try to take like aerial photograph of like Tesla, like factories. Hey, there's so many like cars parked in the parking lot. That means they are not selling it, and there's no demand, right? These short sellers like try to cook up this information, try to make it the stock price fall. So you just so dumb, right?
That's pretty dumb, yeah, from the short side. But it's also pretty hilarious. They're just like, damn it, this Tesla stock won't fall. Because I agree, Tesla stock's probably overvalued, let's say, but it's like that doesn't really matter, right? Like if if it won't fall and you put, you bought a bunch of puts on Tesla, you're gonna lose all your money.
But I mean, this is not now. This is like a year and a half ago, like when the Tesla stock was only like $300, right? Mm-hmm. So anyway, it was just like, yeah.
I can only imagine what the puts are on Tesla. I'm looking this up right now just for fun.
All right. So and then, okay, and at the same time, we can go to your strategy for investing.
All right, hold on one real quick. Oh, Tesla's only at 700. Wasn't it 1,000? Did Tesla drop hard?
No, it's split.
It is a split?
Yeah, it's split into half.
Like this week?
No, a few months ago.
No. Oh, yeah. Well, it's still down from its peak, like this last month, by a not trivial amount, but
it was above. Like if the original Tesla stock before the split, right now it's 800, right? So that means like 1,600, right? Yeah.
Yeah. No, but I think Matt is right that it did drop. Like it was higher than that. I think it may have been over 800 pretty recently.
Yeah.
So, yeah.
All right. Anyway, here's how you get free money on the stock market. Let me qualify this by saying you can get free money on top of what you're already investing. And all you got to do is sell.
Also, you need to also verify, saying that you are not a financial advisor.
I'm not a financial advisor. Yeah, this is what everyone like memes. I am not a financial advisor. But if you want free money, no, it's obviously not actually free money, but it's a very reliable, low-risk strategy to get extra money. All right. Just sell call options. Do you all know what call options are? Are you familiar with them?
No.
Okay.
Not really.
Okay, so options... So there's two types of options, calls and puts. We're just going to talk about calls, but puts are basically the opposite in every way. So a call option is a contract that gives you the option to buy a stock at a certain price up to a certain time. So there's an expiration date. And that's why it's called an option, because whoever buys it has the option, but they don't have to. A puts gives you the option to sell a stock. It's the opposite. I'm not going to mention anymore. So, what people do is they'll say, rather than, let's say you think Tesla's going to go up, for whatever reason, you think Elon's got something up his sleeve, right? But you don't, it's a lot of money, right? To buy Tesla stock. Dang, like every stock's $700. So for a lot less money, you can buy an option to buy these stocks. And if the stock does go above, so you buy the option to buy the stock at some price. And if the stock goes above that price, you can exercise it, and then you get the stocks, and then you can it doesn't really matter that you have to pay a lot of money to get them, because you can then immediately sell them back. And if the market price went above the price you agreed to, you make the difference as profit, right? Mm-hmm. So a lot of people like buying these call options because they let you sort of get they let you get the potential gains of a stock without having to own it. So for a lot less money, you can access those potential gains. Your risk is very limited. It's only the amount you paid for the call option. So there's a premium on every call option. That's finite. But the profit is theoretically infinite, kind of the reverse of the short sell position, right? It's a finite profit, finite risk, infinite potential profit. So that's the reason people like these. But I mean, here's my thoughts on it. You know what else has a finite risk but infinite potential profit? The roulette table in a casino, which is basically what I would say, putting these call options in, in a sense is you're just gambling that you hope the stock goes up. And if you do, you win money. So I want to be the house in this situation. And that's the people selling the call options. So let's reverse this. I have some stock. So options only work all options work with 100 stocks at a time. Don't ask me why. That's how it is. But let's say I have 100 stock in a company, which I have 100 stock in several companies now, because this is what I've been doing. I think my company is at $10. I think there's no way it goes above $15 within the next month. I can sell a call option for $15, maybe depends on other certain factors. Maybe I'll make $20, maybe I'll make $100, whatever. I sell it for a premium. I get that money. I get to keep that no matter what. Now, there's only two possibilities. The call expires out of the money, so below that price. So the stock doesn't go above $15. The option just evaporates. It disappears. It's useless because their option is to buy the stock for more than it's trading on the market. Totally worthless. If it does go above that stock, they buy the option for $15. I sell the stock I bought for $10 for $15 to someone. So I get the original premium and I get the gains on the stock.
So the only way you feel bad is if it goes bonkers, like if it went to $50.
Right. So what you're essentially selling off is this sort of tail end low probability event of it going crazy high and like you making like a huge amount of gains. But and essentially that's what they're paying for. That's the premium that they are paying for, is that chance. And that's important because like the premium you get for it is kind of comprised of two things. It's the difference between where the stock's at and the price, first of all, which kind of cancels out like the cost you paid. But there's also a portion of the premium is how volatile the stock is and how much time's left, because that's like roughly will be proportional to the chance that it goes above it in the first place, right? So really stable stocks and not that far into the future, you're not going to get like anything for it. But if a stock's volatile and you're giving it a month, you can get a lot more for the premium. But so it's like theoretically, yeah, you're selling off the best possible option, but you're gaining in every other option. And, so if you just say like, and for me personally, like if I get a stock and it shoots up super high pretty fast, part of me is going to be like, should I sell now? Because maybe like this is like a peak and it's like, there's a good chance it's going to go down. Like most things tend to average over time, right? Anyway, so, rather than saying, rather than just selling and then trying to look to see if it drops, you can just have this almost as a given, put it at the high price where you're like, this is higher than I would even expect. And I would assume that's a temporary peak and I would want to sell. Then you can have the call, you make money off the call, and then you can get out if it's more than you'd want. And then if it drops back down, because you're right, you can just buy back in, do it again. And like, you don't have to wait that long. So I got some where like, I mean, there's depends on the price and volatility and stuff, but some of these you can do them in a month out. You can make a premium that's 10% of the stock price. So, in less than a year, you can get all the money back. And like, also remember, it's not like, let's say if I'm selling my $10 stock for a $15 strike price, that's the call is at $15. It's not like I'm stuck there forever. If the stock goes up to $14 and stays there consistently, I get all my money. They never exercise it. And then my next call, I can put at $19, right? So like, I mean, so basically so buy stocks you think are good, right? You buy stocks you think are good, going to be a good investment long-term. Unless you think for some reason it's going to have massive growth, all you got to do is sell call options for more money than you think it's going to realistically get to. And that's just free money to you. That's basically what it is.
Are you using it right now?
Yes, I've started to, and I've sold a couple, and I've bought more stocks. I've bought 100 of more companies so I can do more call options. I've been looking at where I can get like the best, like the most premium versus like amount I have to pay for their stock and stuff. So like Delta was early on. I'm like, I should do this for Delta, but Delta's actually terrible because the stock's a little high and the premiums you can get are low because Delta's a pretty stable. So unless you sell close to like the price it is, which means you have a high chance of actually having to sell your stock, which is not my goal. Unless you do that, you're not getting much. I mean, I might still do it just because like free $10 every month is still free $10, but like it's not an effective return of investment for that. Yeah. That said, I still think Delta's a good stock, right? So I'm not holding it for that, but there's other stocks where I'm like, hey, like this one I actually think I can make good money off of selling calls. And as long as the stock doesn't literally just like the company doesn't go bankrupt and I lose all my earnings, I'm still making money.
Right.
So how do you say you buy 100 shares in a company or 100 companies?
100 shares. So all options are contracts for 100 shares. So you can have some number of contracts, but they're all for 100 shares. Because I mean, I think it's just because like to get the premium to be bigger, because sometimes the premium, like, well, I guess it's usually per stock. I think they just wanted the amount of money. Like they didn't want the contracts to be too small, so they have to be at least 100 stock. So you need 100 stock, so you can't really do fractional shares. So yeah, this doesn't work well with expensive companies like Tesla unless you already got a lot of money.
Yeah, I mean fractional share is for like poor people like me. Not for you guys.
Huh. Well, even 100 shares of Delta's expensive for me. That's like $4,000, right?
Yeah.
Yeah.
Well, yeah, Matt has a lot of new money, so.
I mean, I haven't gotten a paycheck from my new job yet, but
disposable income,
But I am I'm starting to push a lot more of the money I just had in my bank into this, but I expect to be getting larger paychecks, so I'm not worried.
How do you come out with a strategy?
I mean, to be fair, it's not like other people have thought of this, but I did. Okay. I was just looking, I was learning about options just out of kind of curiosity. And then as I was watching people talk, they mostly talk about like why people buy them and the strategy behind them. And the whole time I'm like, it just sounds like there should be another side that's better off. Cause they'll talk about the premium you pay for an option, right? So most people who buy an option don't want to exercise it, that is actually buy the stock. They want to sell it back to the market for a higher price. Right. So if you buy a call option for whatever price, if the stock goes up, the value of that option is going to go up. So you can sell it back, for a higher premium than you bought it. So that's what most people are trying to do when they're trading options. But a really important part of this is, like I mentioned, it's dependent. The price is going to be dependent on the price of the underlying stock. It's going to be dependent on the volatility, but also the time left. And they'll talk about this, how like every day you hold an option, you're losing value overall, right? And maybe other factors push the price up more, but like you have to be aware that you're losing value. And because when you exercise the stock, generally the premium, if you exercise the stock, the premium is just the value between the stock price and the call price. But, before that, there's this like potential for it to go higher. And I'm just looking at this like, so people are paying and just losing money every day. And I'm like, I want to be the one collecting that money.
Oh, that's
and obviously other people do. So so what I'm doing is called covered calls, covered in that I have the stock, because like Robinhood doesn't let you sell naked calls, which is what I'm using right now. Might be changing, but different issue. But like you could theoretically do a naked call where you sell and then you don't have the stock. But that starts getting back to that infinite risk scenario where if the price goes crazy high and you don't have the stock, now you have to buy it at the crazy high price and lose a ton of money. But a covered call, it's like there's no way you lose money there's no way you actually lose money. Theoretically, you could lose potential profit from selling the stock that shot up to the moon. But how often does that happen? GameStop's not a normal occurrence.
So how much time and effort I guess how much return you expect to get from this strategy?
I mean, I think for a given stock, like I think with the right stocks, you can get about 5 to 10% of the money you put in as premium every month.
Every month.
Every month.
Okay.
Which seems, I mean, I haven't been doing that long. So like the long-term trends, like I just started. Long-term trends checked out. But that's what it looks like potential. Looking at stocks, looking at the numbers.
Yeah. So how much time you do have to invest, like to get this to work? Now, I guess how much time you have to spend on trading options, I guess.
You could probably do it in like a day a month, half a day a month. Because realistically, you could just every month when the things expire, you just decide say, okay, let's assume if none of them got exercised, you have all your stocks still, you've collected all the premium, your calls are done, you put up new calls for the next month. You can also do this weekly or longer too, right? But, looking at a balance, I think 2 to 4 weeks is a good balance between getting a decent, like a week tends to be the premiums are starting to come down a lot. Unless it's like the stock's going crazy. But, so something like 2 to 4 weeks. So you just kind of reload was what I kind of plan to do, is just kind of reload, every time it's done, like line them up. So all my calls end on the same time, look at the price and stuff, reload based on that. And then, go. So I don't think that takes much time. Now, if you actually get exercise, then you have to decide, okay, I've sold this stock, probably want to put that back into something else. Do I look for another stock? Do I wait for the stock that shot up? Do I want to put like a limit order or something to buy it if I think it's going to drop back down, buy it again, something like that. That would take a little more time, but I don't think a huge amount. Like I said, one day every month at most, and you could easily kind of keep this process going.
No, I mean, I see a lot of positive aspects to it, I guess. I mean, as you say, it's just like the more money you have, the more we're working on percentages here. So the more money you sort of are investing, you have to invest, the more money you can sort of turn over. I mean, that I like the way I've heard about call options talked about before is basically wait for a controversy, then just throw a ton of money at it, and then essentially sell when the stock inevitably bounces back after the controversy. So I mean, but again, like the reason I guess I never really pursued it or thought about it is just because it seems like you need to invest so much to sort of like this is a long game, I guess.
Yeah. So like if you're selling the options, if you're selling covered calls, you got to have initially invested money. Well, if you're buying calls, like I said, you could take a very little money and potentially get big gains if you predict right on where the stock's going.
Right.
So are you using Robinhood, or what are you using?
Yeah.
To do options? Oh, okay.
Yeah, I'm using Robinhood because you invited me, so that's where I started. I mean, I've made some money. This is new enough that I've made a little money off it, but not like really to see like what I'm averaging in every month. But I've made some money off Robinhood, mostly on my solar ETF, solar index fund, which I should have put like all my money in. But I don't know. But yeah, I'm considering switching because of all this stuff. And like I could maybe even have let him slide. But then earlier today, like all this craziness was happening. I sold my one GameStop stock. Hopefully no one from Wall Street Bets is listening because they're going to get mad at me. And then I'm like, I wanted to like go do my actual strategy. And I found like a random stock that I thought hit some good metrics. It was relatively volatile. It had peaked higher than it was, but like it wasn't at its low or its height. So I'm like, I'm not too worried about it crashing out entirely, but it was getting good premiums on the call options. But they restricted it. Because Robinhood has a massive list of stocks that are restricted. And I'm looking at this and I'm like, it's not GameStop or AMC or Nokia or BlackBerry or any the other ones I've seen mentioned or memed. It hasn't been like a drastically changing price like over the last week. So I'm like, why the hell did they restrict this random stock that I wanted to buy? And I was just pissed off about it. Because I'm like, this is like, I can't see any connection to the events with this stock, which has a fairly normal looking history over the last month. But I couldn't do it. So then I'm like, man, I really should get off of Robinhood.
Yeah, no, they're restricting a lot. Like now, you know how they front you like $1,000 or something? Like you don't need to wait. Like now there are certain things like, I mean, cryptocurrency being the obvious one, like you can't buy with that fronted money. Like they actually need you to, like, they require you to wait till your bank pays them.
Oh, one sec. My cat's getting angry.
So,
They front you 100K? I didn't know that.
They front you 1,000.
If you deposit into Robinhood, they'll instantly give you $1,000, up to $1,000 of margin. So, if you only deposit 500, they'll only give you 500. But it is margin, but it's not much, right? Because you already have like the transfer queued. I guess maybe you could cancel it and then try to run out without paying them if you lost $1,000 in a day. But it's nice that they do it, right? Because I've taken advantage of that.
Right.
But that's not maybe enough alone to make it worthwhile.
Yeah. No, it's not like a huge amount of money, but it's definitely like I've gotten to the point a couple of times where I was just like, I have to wait. Because when I first started, I was just throwing like a couple $100 in, and it was like, oh, this is convenient because I can buy things instantly. Mm-hmm. And then, then
you try to put in some real money, and you're like, oh, I need like a week.
Yeah,
it takes a while. It's really slow. I'm like, how come Venmo gets me this like a day or two later, and like you're taking so long?
Right. You can pay like, a 1% fee and get it instantly at these other companies.
Never done that in my life. Heck no. So anyway, summarizing this, if you already have stocks you think are good, but you aren't expecting to blow up, just sell covered calls on them. Make extra free money.
No, that's fair.
All right.
And this is you, Shu. You buy stocks like this.
Options?
No, you buy stocks that I think would be good for this. You sit on stocks. You sit on stocks you expect to grow long term. So, you just got to look and say, is this going to blow up in 2 weeks? And 99% of the time, the answer is going to be no.
It's just, this is good. The only thing I will say is the 100 share thing is rough.
It's like I said, it's annoying. It makes it it kind of excludes a decent amount of companies from it being viable with.
Right.
But
well, I have most of the money I have on Robinhood is in stocks that essentially I bought when they went through the floor in March. And I just bought like a lot of, like, I put a decent amount of money into those, like basically Boeing, Lyft, and Delta. And, basically I'm just like, okay, now I'm 50% gain. Like, I'll just sort of let them sit there. So if they let me do that, then I would, but if I need to buy 100 shares of those, that's like a $5,000 minimum investment.
Yeah, that's not ideal. I was just checked Lyft because I'm like, I know Boeing and Delta, and especially Boeing, that's not going to work. But Lyft, it's pretty pricey too. No, another reason I wish I had bought more of my solar fund, because now it's too high to make this not a pretty painful thing. So I could also be like, because right now I'm like, okay, this peaked way up, but I'm like, I think like it looks to me like it got to a new peak and it's probably going to be like settled and not go crazy for a while. And I'm like, this would have been perfect timing. But I can't afford another 80 shares in it. I guess I could, but I'm not willing to put up that much into one thing.
Right.
Yeah.
Oh, that's fair.
All right. That's good. That means I need to look into options then. Because, I've been, I guess I like simple strategies and I don't like anything that's too complicated and then just buy and hold it. But I guess I need to look into options to see if it's worth the time investment effort.
There's a lot of crazy things people do with options, but I think this, like I said, I think this is like a very pretty simple, just low risk, reliable way to get more, more than any, say, dividend on the stock's going to give you, right? Like, compare it to that. And then you're like, oh yeah, this is way better.
Okay. All right.
Cool.
I think, that's pretty much, I'm not sure. Should I go into the book? Because, it's already like an hour. So,
how much do you want to talk about the book? If you really want to talk about it, we could save it till next time.
Yeah, it's up to you. We can save it till next time. I will say we need to take a week off because I'm moving a week from today. But,
Oh, when are you moving?
So, I'm driving down a week from today. So, because everything will be out of the house Sunday. So,
all right. I think I would say let's talk about it. Actually, I think it's relevant. So even though, let's talk about it. So the book, as you can see, it's called.
The listeners at home cannot show.
Yeah, all I want to know is where I'm going to die, so I never go there. And it's also the subtitle is a Buffett and Munger, a study in simplicity and uncommon common sense. Right? So this book actually...
Can I just say that I really enjoy the title and hate the subtitle?
I'm with Mike on this.
That's good. So basically, no, subtitles are a little bit too... All you need to know is Buffett and Munger. So it's all about the wisdom from Buffett and Munger. Buffett and Charlie Munger. I think I mentioned before, Charlie Munger to me is like the modern day Benjamin Franklin. Mm-hmm. Actually, I think I mentioned in podcast that he died, but actually I just found out a few weeks ago he's still alive. So.
Oh man.
Yeah. So I actually after I found out he's alive, I actually wrote a letter to him. So I'm not sure if he have received it or not. I said, I'm surprised that you're still alive. So I just take a chance to write a letter to you. So.
Maybe he'll write back.
What flattery.
Is that how you led your letter? Yeah. I'm surprised to hear you're still alive.
Yeah, exactly.
I don't think he's going to write back because he's like billionaire. So he's like 92 or 93. He doesn't have time to read. So
to be fair,
anyway, I just want to wrote him something to So
you're an inspiration. I hope you live for a few more days.
Yeah. So this is my second
Gamestop.
Yeah, exactly.
So this is my second favorite book. Of course, after my first favorite, which is Harry Potter. So anyway, just want to shout out Harry Potter as well. So the reason I like this book is because it talk about. Actually, let me go through the first page. Actually, this book actually caught me in like first page. So basically, it started with a description of a guy, just lying on his couch and feeling miserable, thinking about his whole life had like being a loser, feeling like he's having made very very poor decisions, right? So I was like, oh man, this is like so me almost, right? All the decisions I made back, have been quite bad looking back. So he basically goes into a dream, right? And then in a dream, he went to almost like in a dream, he actually came to in front of a temple. It's called almost like a library of wisdom. And there's a character called librarian. She basically guides him into the library. And inside the library, he met two persons. One is Warren Buffett, the other one is Charlie Munger. And he basically just go through, have a conversation with the librarian, Charlie Munger, and also Warren Buffett about life decisions and also investing decisions. So basically, this whole book is about decisions in terms of investing, business, and also life choices as well, right? So I guess go back to investing a little bit. The reason I really like the investing because a lot of decisions you make in investing, they are also applicable to your life decisions as well, right? So that's why I'm very interested in decision in investing, where you can almost you can practice every day. You're looking at business, deciding how to whether invest or not. It's almost like you're making a decision constantly. So it's almost like a place where you can practice, right? So anyway, today I would say I'll cover. Also another thing is in this book, I almost underline every single page, and there's no one page has no underline. So all the quotes in here is just almost anyway. That's why I really like this book. So who's that?
Come on, this is Rory. He's been on the
podcast.
Rory, yeah,
most episodes. I forgot her name.
My cat jumped in my lap to our many listeners who can't see.
Yeah. So there's one section on this book is about investing and business, right? Mm-hmm. So basically what he's suggesting about investing is that when you're looking at business, right? So when you're buying a stock, right? Because Warren Buffett is almost something called value investing. You only invest in something for long term, right? Basically, that's what they do. They buy stocks in like Coca-Cola, Costco, because they know it's long term. So basically, the question is now, how do you decide which stock to buy, right? We're talking about Robinhood and stuff, but so what they do, first thing they say is that you need to so first thing they say is about they only buy something they understand, right? So they need to understand the business in order for them to invest in this business, right? To buy stock in this business. So the first thing is they say they need to understand it. So to them, I guess the understanding means it's not about I guess to them, the understanding is if you can predict where the business is going to be in 10 years, right? So that's why I asked you earlier, how do you know whether GameStop is a good business, right? Does that make sense to you guys?
Yeah, no, I get you.
Right.
Yeah. So they do not actually invest in what do you call that? There's technology, because they say they do not understand technology, not because they don't know their application or benefits. It's mainly because they cannot predict what's going to be in 10 years. The business is going to be in 10 years, right? Because technology changes so fast, right? So that's one of the reasons they don't invest in technology, right?
But I would say they do invest in things like Costco. I mean, I think technology is changing Costco's model, right? Business model.
Well, every business uses technology, but there's businesses that are about, creating new technology, just businesses that use it, right?
Well, yeah, that's fair. But
Costco is a good example, right? So Costco, they can understand, they can see, they can predict almost where they can see where the business is going to be in 10 years, right? It's easy to see Costco supermarket is probably not going to go anywhere, right? Whereas if you invest in other technology companies, software companies, you don't know when they cannot predict where it's going to go in 10 years, right?
I guess. I would say that there have been big department stores and stuff that have sort of bungled sort of the seeming, stranglehold they had on an industry and gone under. And and you could sort of say the sort of mainstays in technology like Google and Microsoft, it's they have so much money that I don't see some competitor coming out of nowhere with some new technology that just knocks them off, So
yeah. Well, no, the reason is not debating about whether you can. Microsoft is a good business, right? I'm saying that for them personally, they just say if I can see where the business could be going to be in 10 years, and they will invest. If they cannot see it, they don't invest, right? And that's the rule, right? And then of course it depends on the person. It's going to be depend on the person, right? Because what is very different from Charlie Munger. Because you are computer science, so you might be able to understand the business better. Because what you invest is going to be very different from what Charlie Munger and Warren Buffett invest in, right?
Sure.
Yeah. So, and then I think there's two things about, I guess, they talking about how do you look at a business, whether it's a good business or not, right? So one thing they suggest to look at is something called competitive advantage, right? And there's two factors: there's a competitive advantage, and also how durable the competitive advantage is. How long can this competitors continue, right? So these are basically the two important things. And then they call the competitive advantage almost like a moat for business, right? You guys know the moat,
right? So around a castle.
Say it again.
Like around a castle, a moat.
Yeah, exactly. And then what business should do is actually try to widen the moat, right? You want to make the moat as big as wide as possible over time, right? So look at the competitive of the business. If you think it's a good competitive advantage, it's going to be lasting, then you probably should invest in this business, right? So one thing if you can't see it, right?
Right. Well, the barrier to entry for other, that's, I guess, how it's phrased, like, when it comes to, like, other businesses trying to get into that industry. What's their barrier to entry, right? I mean, that helps to understand if there's, like, a monopoly or something. Because, like, you know, in the airlines industry, it's like, it's pretty hard to see, like, another airline, like, breaking into it because the barrier to entry is so high. I mean, you need, like, money for planes. You need to be able to get routes and get into airports. And, like, I mean, the resources are already limited. So, and it would take a outrageous amount of money to, like, start your own airline, right? So.
Yeah, like Coca-Cola, right? It's a very good business because his moat is very wide, right? It's his brand, right? Because nobody can really like replace Coke, right? In America, right?
Right, and they already have like the trucks and distribution and everything set up for like a worldwide soft drink company plus the other brand. So
it's the taste, right? Now everybody's associated with the taste, right? And the Coca-Cola, and that's why everybody when they switch to the new Coke flavor, everybody's like, "What the hell are you doing?" Right? The new Coke fiasco, yeah.
That is fair.
So Nozan is durable because Coke it's not going anywhere. And like Costco has very good moat as well, right? It's the brand, the quality, the membership, all the stuff they do, and Amazon as well. Mm-hmm. Yeah. And so I guess and then since we're talking about moat, right? There's two things you can evaluate moat basically. It's something called essentiality, like how essential is the moat, right? Whatever. And then also the other thing is looking at is like pricing power, right? Which means that if you raise the price, do customer care, right? Like for example, like Netflix, right? If they raise the price a little bit, maybe $1, I mean most people probably don't really care, right? So that's how do you, I guess, determine how strong the moat is, right? If you raise the price a little bit, do people like go to another alternative, right? So.
Sure. Well, I'm just trying to think about like, I guess it depends on the industry. So there must be like industry specific sort of guidance with respect to like how to push that like envelope where it's like, okay, we'll try raising the price 50 cents and see if they notice. Like, I mean, for example, Pacific Grill, right? Pacific Grill, when we first started going there, was $6.99. Then they went up to like $7.15 or $7, like they went up like 20 or 30 cents. And then they went up like a full $1. And that was, at that point, I was like, this is ridiculous. They're only a few dollars less than like a tin drum, right?
Yeah, I thought they only went up to $7.50. Did they go above that?
I feel like they went to $7.99 by the time I stopped going.
Maybe. But those were normal. Those were due to inflation, right? It's not because they want to price it higher, right?
Well, they increased it a little faster than inflation, I think. Yeah. But I think the point Mike is making is that kind of pushed up to the limit of like still being the cheap food option, but not so much so, right? Like they were just barely keeping their cost advantage.
Right. So, yeah. So there, I guess, depending on the industry you're in, there's a question about like how to do that most tactfully, I guess. Because obviously, like when it comes to like airlines, it's like JetBlue or something, which is usually like has decent prices compared to like Delta. Like they may try to like inch their way up a little bit, but it's like at what point do people like use Delta out of brand loyalty, even if they're within, even if Delta's like more expensive, but it's only like $30 more expensive. So I think there's probably an art behind that, or an art, and by art, I mean a team of thousands of data scientists behind that.
All right. So I think that's basically one thing I got from a book about, how do you, when you're looking at business, right? When you're looking at fundamentally investing to me is like buying, investing in, you basically look at which is a good business and you just buy the shares in that business, right? And then just hold it for a long time, right? So you just, So that's why I like to look at, okay, what's business is good, so I can just buy it and just never sell, right? So I think Costco is a good one, and then Disney is another one, right? Disney is like every child in America's mind is like Disney growing up, right? So you're already exposed to Disney at the very, very beginning, and then Mickey Mouse, right, is never gonna go away, right? So in the whole world, right? And in China, it's Mickey Mouse as well, right? So.
Right.
No, this is, as you say, value investing, right? Really investing on the grounds of companies being, good, solid companies that are going to continue on, as opposed to playing the market, which is way more fun, but, much closer to gambling.
Yes. I see. Well, I don't like playing with the market. It's almost like you almost like you just like playing with like I guess I don't gain a lot from it because I like to be ability. I guess I like to learn how to seeing a good business, right? Like what is a good business, right? And develop a business judgment to now, okay, say, oh, this is a good business, this is a bad business. So then that's why I want to learn, right? So that's why I don't like doing the other stuff like, just like options and then playing with the market basically, right? So yeah. Also like one thing I like to do is I like to minimize my decisions, right? So if you make one decision, that it can eliminate thousands of decisions, right? So if I made one decision of I just buy and never sell, that's one decision I made, right? And I don't need to constantly thinking about every day, now, do I need to say it now? Do I need to say it now? Do I need to say it now? You just take out all your time, right? So that's why I asked you earlier, like how much time, effort for options, right? Because if you take a lot of time, then it might be better to invest that time to do something else, right? Because investing actually in terms of it's basically resource allocation, right? Which it doesn't have to be money, right? It could be your time, right? Your energy, right? So how do you basically you want to move, move the resource from an area of low yield to a high area of higher yield, right? So that's what investing is, resource allocation, right? I got it from Tim Ferriss, and that's his definition. But anyway, so yeah, it could be time, energy, right? So that's why, yeah. Anyway, so
no, that's why I'm wasteful, because I enjoy my time too much. So like I will pay extra money for just basically just people dealing with stuff like.
That's not waste, right? That's waste money. You're not really wasting money, right? You are investing because money.
Saving time. You're being scrupulous, just not with money.
Yeah. Well, that's fair. But yes.
I just want to say, investing is resource management, but like almost everything you can view as resource management if you really break it down.
Yeah.
But that's different topic.
That's true.
Yeah, that's
from
investing.
Eating.
Right? If you do any kind of resource management, is investing, right? So, I mean, resource, not allocation, same thing, I guess. Yeah.
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 You're always investing something.
No. Yeah. I think, it's just your decision about how much, like obviously day traders, right? They spend like the majority of their time trying to do this and make money, as opposed to someone who just buys Vanguard index funds and then, that's it, right? Has the automatic deposit every month into their, big index and just leaves it.
Totally.
Yeah, I would say that's the best best way to invest, right?
I'm surprised you actually have so many individual stocks. The way you talk about it, I would have thought you would, when you're really trying to minimize decisions, why don't you just pick the big, index funds and the like and just, throw money in there?
I use Betterment, or Wealth Fund, right, to do these like index Vanguard like investing, right? Put the money in there. Like instead of putting in saving, you put money in there, right? So I do like buying stocks on Robinhood because it's fun, right? It's also like looking at business, right? So learning how to make the decisions. Right?
Yeah, that's right.
So it's not like, but I only do buy. I rarely sell, right? I just like which company is good, and I just like whenever they are low, I just buy more, right? So I basically just looking at how basically try to practice how how to recognize good business, basically.
Mm-hmm.
Right?
No, that makes a lot of sense. And I think, we're not financial advisors, but most people would probably agree that, the majority of your investments should be fairly safe long-term stuff. But taking out some portions of something that you think is fun or interesting can potentially get you more money. And if nothing else, can help you learn. Because I'm less interested in individual businesses, but I do find market dynamics and the interactions between all the people on markets very interesting. And all how people try to evaluate the probabilities and stuff. So that's, to me, options is really interesting, just kind of from a fun standpoint. And I think if it's something that you're already interested in, you have a much better chance of doing well with it, right? If you're interested in businesses fundamentally and what makes a good business, you're probably going to do a much better job than me evaluating companies. When I'm skimming through, their info, and I'm I don't really care that much. I just want to double check some basic things, that it's not something obviously toxic that I'm missing. And then it's that's overall, I'm more interested in playing against the other investors.
Oh, yeah, wow. You treat it as a game, right? So you're having fun, beating other people, right? That's what you try to do.
That's why machine learning wins it, because it's a game.
But, there's machine learning might be able to win against other market players like me sometimes. But I think the value investing can't be automated, at least right now. So that strategy is going to be good for a while.
Yeah. Well, to most people, value investing is boring, right? So unless you don't get all these high swings, high gains, right? And that's why it's boring. That's why a lot of people don't do it, right? I mean, I think you do it for safe, but most people, and that's why picking stock is just, and now you say it's more fun, right?
It is. And, some people, you could say could be a little bit of gambling, but you can do strategies that are fairly low risk. And unlike real gambling, you go to a casino, the house always takes a cut, right? They always have the advantage. So long term, you're always going to lose. But in the market, long term stocks go up. So, as long as you're not worse than average, you should make gains, right?
Yeah.
So you got the edge for you, which is nice.
So basically, I want to go back to the book a little bit. I forgot to talk about the title, right? What does it mean? All I want to know is where I'm going to die, so I never go there. This is Charlie Munger saying it all the time. So the reason it kind of encapsulates his ideas of what he advocates is basically you can go through life, right? Be quite successful just by avoiding big mistakes, right? Mm-hmm. So watch out for stupid mistakes. You don't want to put all your savings into a Bitcoin, right? Or Tesla, right? Or Gamestop, right? So avoid these stupid mistakes. Just do simple stuff. You will be successful, right? If you live a long life, right? So you should, these simple strategies should help you go through life quite successfully. And then he also advocate don't try to be smart and think that you are smart, educated, and that you can do something probably smarter than other people. Just come up with complicated, smart strategies, right? He's just saying that those actually, these simple strategy actually probably works better than those. Because you don't need to be brilliant or very, very super smart. Basically, you just need to have some common sense and just avoid these don't do stupid shit, right? Mm-hmm. Yeah. And then go ahead.
Well, I was just gonna say it's the baseball thing. With 2 outs in the inning, choke up on the bat and just try to hit a single. So.
I had no idea what you said, but sure. I don't play baseball. The most boring game in the world, right? So
it's competitive with soccer.
Yeah. Anyway, so that's the meaning of the title, I guess. But there's a lot of other things that we can talk about next time. Just if you want to have a happy life, right? Don't marry, make sure you find the right person to marry, right? So, don't marry someone that you're gonna regret, right? So, those decisions are very important, right? Yeah.
What's on your jacket, by the way?
It's the microphone.
That's what I was wondering, actually. I'm like, was that a subject mic? I don't feel like you sound different than last week. Do you,
sounds,
Mike?
I think he used one last week.
Yeah.
Oh, did he?
Yeah, I used one last week. I started using it because I feel like the recording voice when you publish in a podcast, the audio is not as good.
Mm-hmm.
Just using but this one is more clear. This is what I use. When I go in the street to interview strangers, right? So that's how I stay in a social distance because I just have this on them, so I can record their voice very clearly. And then I record my own voice and my own questions, like what I say on my own phone, right? Mm-hmm. So then I had to combine the audio later, so it's kind of a lot of work.
Yeah, that's a pain in the ass.
Yeah, social distance, right? So that's why I use this. Yeah.
All right, sorry, side topic, but.
So yeah, anyway, so this just talk about this book. So yeah, anyway, I think that's it for now for this one for the book.
I thought it was that's interesting. Well, I'm glad we talked about it, but I thought it was more focused on like life and death and
Oh no, yeah. I think it is about life and decision, right? But they are almost like the best investors in the world, right? And they go through. They are like 90 already, so they have a lot of, I guess, life wisdom, right? So anyway.
Sure. No. I mean, I can definitely see, like I feel like a lot of people, like if they try to, I was going to say swing for the fences, but I'm not going back to baseball. But if they go for something like big or they like work too hard, that's when you can burn out or, have something truly terrible happen in your life, as opposed to whereas if you just like basically make like manageable goals and keep plugging away, like eventually you'll work your way to, it may not be, Warren Buffett or Charlie Munger status, but you'll work your way to something solid. So
here's another way to frame it. If you kind of take a high risk approach to your life, you're either going to die young or you're going to lose, right? Because like after enough years of doing the risky plays, you're going to lose eventually, for sure, even like if you win for a little bit.
Well, it's like if you're in a casino and you are playing roulette and you bet on 00, like you can hit once in a row. And then like you're like, oh, that's 36 times my money. But like if you don't walk away soon enough, you're probably not going to hit many times in a row. So.
Yeah.
So, but I just want to hit once and walk away.
Or flip thought, is this just billionaire investors trying to suggest to the masses to just keep their heads down and grind so that they can keep all the big gains?
That's possible.
An alternative. Yeah. This could be a psyop, just trying to trick people.
This is a propaganda by the ruling
why would
class.
they do that when they are giving all their money away?
Yeah, probably doesn't make a lot of sense, but you could maybe sell a book saying this and get some people excited about it.
That's right.
True. And that's why I'm talking about this right now,
Junto Club.